Hey there, traders. What's going on? Jamie Saettele here. It is July 1st, 2015. Frightening to think that we've already seen half the year go by here, but we have. And going to get started with the midweek strategy webinar here at SB Trade Desk. All right, so the topics to cover today, main topics we want to look at. Besides, obviously, some of the setups that we are following, in particular pound yen, which could really be a monster on the downside. But I want to take you through, the monthly scan now that it is a new month, of course. As you know, I do publish the daily and weekly scans, of course, but do the same thing on monthly, and they are absolutely incredibly revealing and have been for a while, but I want to, show you the potential, for what could happen with this dollar snapback if it gets going. We'll also look, of course, at just general dollar stuff and some of the slopes in the U.S. dollar and the DXY, the ICE. Want to look at the dollar yen and go over that a little more, and the Nikkei, which obviously very close relationship, indicating potential for some big opportunity here, and then finally a proposed scenario, if you will, for the euro moving forward. Over the next few weeks, we'll look at that. Okay, so let's go to the scans, monthly scans. All right, so the monthly scans, the duration. Again, that's the extended advanced decline, right? You're going to see that anything over 9 is considered extended on the upside. Anything negative 9 is on the downside. So basically every dollar pair obviously is extended, okay? I mean, pound Aussie is extended, dollar, Turkish lira, US dollar itself, dollar MEX, dollar Rand, dollar NOK. Okay, Euro, Kiwi, and Aussie are all extended to the downside. So why don't we start with the euro? Okay, so this is a monthly chart. I'm going to change this to the euro right now is extended to a point. Minus 13 is the reading, okay? All that means is that the euro's never been, the close 4 months prior, okay, is greater than the close of the last month. And that's been going on now for 13 consecutive months, okay? So that doesn't happen too often. It's only happened twice actually in history. This month, right now, and November of 2000, right here. Okay, so we're obviously looking at just since the euro inception. This wouldn't obviously include the Deutsche Mark going back before then. Markets can get this extended on the downside, of course. A market that does have a long history, or a much longer history, is the British pound. Okay, and as you can see, we've had periods in the British pound going back to the 70s, where the British pound was extended for 17 consecutive months on the downside before you got the insane move back to the upside. Okay. Let's see. Leon's got a question here. So trying to expand this. Are these numbers based on scans done on TradeStation? Yeah. So I do these scans. I've written them myself, but yeah, they're on. I have them on TradeStation. Let's look at some of the other ones that are extended. We've got Kiwi that's extended on the downside, obviously, to a 13. Okay, right here. So you can see right here, Kiwi 67.49. We're trading extended to the downside. The lowest, we've only been down there a couple times in history. Here, it's 1981. Down here towards the almost all-time lows, 1985, and then here back in 1998. Okay, so entering a period where I think we could actually end up seeing finally some sort of a bounce. Look at the long-term slope here in a sec. Aussie is also extended to the downside and may very well become a little more extended as the consolidation that we've had for basically since February might lead to 71 here in this trend line, okay? That extends off the 2001, 2008 lows. So you'd be looking around 71. All right. But it's good to have this in the back of your mind, obviously, that we are, again, this extended towards dollar strength. The euro is probably the most interesting one, again, just because we've only been in this place, if you will, once as far as this indicator is concerned. And that's all the way back here in November of 2000. So interesting to note. Let's start with the dollar yen. Obviously, we've gone through a ton of stuff on dollar yen here in the last few weeks with the tons of charts, right? I explained last night that we had, a monthly key reversal. Now, this is not a J spike, right? The J spike, of course, requires a large range, and we don't have that right now. The range has to be at least as large as or greater than the average range for a monthly chart over the last 12 months. We didn't get that. We didn't have any J spikes last month. Okay, but we do have basically a massive long-term line of importance. I'll call it former support line, 1995-2005 low. You can see it here across through the 2007 low. You can see it here across through the 2008 August 2008 high. And, in a sense, this could end up being like a false break to the upside, okay, because obviously we took out the 2007 high here, okay, went back to the 2002, all the way back to as high as 2002 from, what's that, December 2002 or something like that, and closed lower than the prior month. So it's not just a key reversal from a 12-month high, it's a key reversal from a 12-year, 13-year high, basically. Okay, and I'd also put on the chart last night just a simple moving average. I think I had a 12-period moving average. I think I actually have this chart somewhere. Yeah, here we go. So, even a move back to the 12-month average gets you, probably 117 or something. And, just kind of treating that as like a really long-term support area, potentially. And then, of course, when we look at the median lines on the longer-term basis, within this long-term structure, we're talking about, getting back to maybe this median line here, which, over the next couple of weeks, you've got an intersection near 120 or so. You've got a possible intersection towards the end of July near 114. All right. And of course, we are in a short position. And the question that I'm sure is on many's mind is, where does this change? Well, as we head in tomorrow with NFPs, right? One thing that you want to do with this, larger swing mentality and having evidence that we could be at a really big turn. I mean, the mistakes that have been made in, as far as this big swing trading is concerned, and from my perspective, if you remember, I'll take you back to Kiwi, right? You remember Kiwi? Look, we were short right here. We were short right there. Right there. Okay? We were short right here. And the mistake was made to tighten the stop too early. Okay, and we ended up getting out, and now Kiwi's down, working on its 10th week down in a row, and 1,000 pips almost to the exactly that it's off the top, and we were short from very close to the top. We were short from 76.90. Top ended up being 77.43. We had a 77.50 stop, and here we have a 1,000 pip decline into what would be a huge target area because it's this massive confluence of all these slope lines, but we have dollar yen now and the potential for what could be a much larger turn to the downside. And I don't want to make that same mistake of tightening the stop too early. Okay, that's what the intraday stuff is for that Mike does. As far as getting shorter term objectives and whatnot. So I'm going to stay with the bearish side here the stop's already at break even anyway. So as long as you've got this slope that's still working on the downside, I've got something here too potentially. Okay, as long as we got a slope that's still working on the downside, I'm going to stay with it. Look, you could end up having support come in tomorrow. You could end up having support come in tomorrow near, get rid of this here, near about 122.50. All right. If you were to draw a short-term fork here, let's see here. There, that's the one that I believe matches a little better. Short-term fork there, you'd end up getting potential resistance up near 123, 123.70. Okay, which I think might be close to actually the pivot. 123.69 might be close to the monthly pivot. I believe that's 23.40, 23.89. Yeah, so we're actually already pretty close to it. 23.40. The dollar yen, though, first of all, a first target, is of 2 equal legs down. Okay, kind of a minimum area you'd be looking for, even if you were broadly bullish, right? Dollar yen, which look still might be the case. Okay, even if you were broadly bullish dollar yen, and you're still looking higher at this point in this long-term move. Okay, I'm not saying that's the wrong way to look. It might still be higher for all I know. I'm just going with the reward to risk here and the indications that we got in the long-term monthly and everything else. You'd still be looking for probably 2 legs down from the top, in which case 120.97 would be your area of interest. Okay, and that would be 2 legs down from the high. Okay, again, so it's where the decline from the top would consist of equal legs from right here. Okay, from 124.37. You don't want to see the market obviously trade outside of the upper parallels. When we have, here's short term, this is a short term chart. I think I put this up earlier. We're, as far as a short term bullish slope to work with at this point, don't really have a lot of good trading around it. Okay. This might be a little better because it trades. You can see the trading on here at this high this morning. Okay. You could get support, down near 122.50 along this lower parallel. So, if you get down there, that might be an area where you'd want to reduce some long position or short positions. But for me personally, I'm content to stick with this trade given, the asymmetric reward to risk factor it seems on the downside right now. So I'm fine with sticking with dollar yen. Resistance again, 123.40s, 123.60s, 70s. NFPs tomorrow comes in at right up here actually, so that's interesting to note. 123.70s, and down here about 122.70. So 122.70, 123.70 looks to be decent support and resistance for NFPs for dollar yen. Okay. Again, consider the Nikkei with dollar yen as well, right? So here's the Nikkei. It's got this wedge pattern it's been forming. We had that new high up here, okay, on June 24th in the Nikkei. We obviously... Oh, wait, hold on. You guys are saying it's going in and out? Okay, hold on here. I'm not sure what to do as far as fixing this is concerned. Okay, he says it did for a few seconds, otherwise you're okay. All right, well I'll just try to be slow, I guess, and won't go there. But let's look at the Nikkei, which should be probably considered in any long-term analysis of dollar yen. So with the Nikkei, we had a similar, key reversal on the month, right? And here we are on the first day of the month, and the thing's up 1.5%, 300 points. Okay, but let's zoom in a little bit and look at the structure on this hourly chart. 1, 2, 3, 4, 5, and perhaps completing A, B, C. In fact, one could count if you wanted to get really detailed, you could count like 1, 2, 3, 4. See, there you go, hourly count of the Nikkei. So, even if this isn't some sort of long-term top, even if it's, say, just another leg down within an ABC correction from up here, in other words, this is larger A, B, and C, then we're still probably looking at a drop down towards, I would say, in the 19.6s. I want to see where you would end up if the Nikkei were to end up at 19 or 27.75, which is daily reversal. See, I've got this level up here. This would be a level to watch for resistance. Come down for a test of the June low on 618 potentially. So bottom line is there does, based on the fact that you do have an impulse down from this peak, and very unlikely that it would be part of a broader correction, say, that finished on the downside, right? As far as like a flat pattern, like an A, B, C, something like that. I would be looking for at least one more drop below the June 30th low. Okay. Before you would want to look higher from support again, or attempt to. Okay. So this gray line here, the bold one, is probably the important one to watch, just because it was former support, it was resistance, it was support, it was support. This was support throughout May and April, okay, and it was resistance here in March. So this line does appear to be quite important. If we were to follow this short-term fork, you could end up finding support down here some point next week, okay? So, we'll deal with that as it comes, right? But in the near term, the point I want to make that is still that I think you've got, additional downside with this count. Okay. And there's a lot of stuff that can happen between here and there. This could be part of an A and a B. You could have all kinds of stuff. The point is the downside risk is larger and the upside risk is extremely limited, right? Because if you go above here, this is totally wrong. So, I still am going to stick with the idea of a stronger yen from nearby, barring, obviously, a break through the upper parallels that we're working with. But that's where I think right now the best opportunity is. Okay? And we see that, obviously, in, pound yen. It's a setup that we've been tracking for a while, right? Got the monthly chart, the parallels, okay? Again, this was, I think, posted on Sunday's post, this exact chart. Set red dot, 7 consecutive weeks up, 7 consecutive weeks up, 8 consecutive weeks up, 7 consecutive weeks up, and now we got to 11. It's more than likely going to end this week, right? And look how we finished last week. This isn't quite a doji. It's you can kind of call it a hanging man doji, if you will. But downside potential here. Again, significant, right? The big support is this line. The year opens 186.80. We're trying to find a way to get short. I advocate last night that just putting an order on the upper parallel up here is probably the best way to do it. And again, that was like 94.10 today. Okay, or so. It's not going to be tomorrow. Tomorrow's going to be a little lower, 93.70. So if we continue to hold up, tomorrow the upper parallel comes in roughly in line with the 50% retracement of this decline. Okay, so it's a broad window, right? But the fib levels of 93.60, or I shouldn't say fib because 50 is not really a fib, but the retracement levels, if you will, of 93.60 to 94.14, kind of offer you the best zone, I think, and the fact that it matches up, at least the bottom of the zone matches up with the upper parallel that we've been tracking for resistance, which I think is a really good slope. I mean, we've bounced around this thing for a while now, right? We identified it as early as back here when we went down through the median line. Friday, contemplated putting an order into short at the week open price of 95.16. I did highlight the fact that you did have resistance at 95.16 on Friday. In the Thursday night post, we were looking for resistance at this level. But heading into the weekend, obviously we're already short dollar yen, so wasn't going to kind of push the envelope with holding a bunch of weekend risk with everything going on. But that would have been kind of a dream scenario, right? But in any case, the slope does seem to have an awful lot of merit here. A great scenario for tomorrow would be if you got a kind of a risk on initial reaction and you ended up seeing pound yen trade up into this 90, let's see where tomorrow morning. This parallel is like 94. So if you ended up seeing it near 94, and then you could end up getting triggered on a short up there, okay, as part of maybe an A, B, C correction, and then the next big leg down to occur some point next week. So all that said, let's just make it simple and say that this is the line that we want to short on, right? That's about it. That's the line you want to short on, right? Sell the red line. There's the strategy. I like that idea. So that's one of my favorite things or favorite setups right now as far as swing is concerned, is really pound yen. Um, Everything seems to be coming together. Yes, Mark says kiss, sell the red line. Absolutely. So sell the red line. Sounds good to me. Um, Other setups that I haven't. Well, I have kind of put out tweets on them, but haven't necessarily written about them in detail on the. Chintan asking about Pound Aussie. Yeah, you got it. I'll check it out. Haven't really looked in detail on the on the swing updates, but the pound Euro Aussie though. Euro Aussie maintains an upside bias here. Just it's trading at support right now. This is Euro Aussie. This is a 4-hour chart. Okay. Um, this was obviously the gap down, so come down into here, and we've come into support now. I talked about this. I spent a lot of time on this last week. Remember this? Talked about the reversal levels for, say, hourly / 4-hour reversal levels. We've got that right here, right? The close yesterday of 143.90. Okay. The low today, 143.87. It was this morning on that spike in Europe with Euro and whatnot. So we're holding support here on Euro Aussie. This is Pound Aussie. Well, let's see. Let's take a look. That was the short term. Let's take a bigger look at it, though. Kind of look out a little bit. As I got my eye just caught. I'm seeing some rates right now, and just highlighting here. Look, pay attention over the next couple hours here. We're coming into a pretty good looking level for Euro right here. Okay, it's basically 110.35 to 50 or so is an area for the Euro that we could actually end up seeing a pretty decent sized bounce. I was hoping to get it this morning, obviously during a more active scenario or session when you'd want to trade it, right? This is kind of a weird time, middle of the afternoon in the U.S. before NFPs, which is on Thursday, of course, because of the holiday being celebrated in the U.S. on Friday. But still at the levels there. So be aware of 110.35.50 as we head here into late U.S. trading. Dollar's really picked up since I started doing this webinar. Noticing that. Pound Aussie. I'll go to Pound Aussie. Yep, dollar CAD 25.85. So glad I didn't take a trade there. That's for sure. Pound Aussie has had a nice run on the upside. What's this? Weekly chart here, working on a reversal. Will it be enough for a J spike? Let's find out. Man, crude oil is weak as can be. Well, it's not. It wouldn't be enough yet. The range wouldn't be large enough at this point, but. Pound Aussie. So again, I don't have a slope resistance here. Even at this point, obviously, it would have to be uptrend resistance because this is a massive uptrend. But I don't have uptrend resistance. That would actually still be a little higher. It looks like this week, Chintan, that is like 207.80.90. It looks like next week it's like 208.06, something like that. So you might be aware of potential slope resistance within the uptrend at higher levels. This is again a weekly chart. Okay. That would probably be your big support. On the daily chart, we do have an interesting structure to work with, actually. So if you take the low here from March 25th and the high from April 2nd and the low from May 6th, it's the year open, then you're going to have the median line come into play right up here at the high. Okay, so in a sense, you could still be looking for a pullback within this trend. Okay, a short at this point is counter trend. Okay, but there's a very well-defined confluence here between levels at about, looks to be about 201.40 or so. Okay, right here. So 201.40 for resistance. Again, daily reversal support, would always be aware of where that is, especially when you have a larger reversal bar like a J spike, which we did have on 629. On Monday we had a J spike, so I'd be aware of daily reversal resistance up there. The short-term chart, which I'll show you, might give you a little better sense of possible timing. Okay, at this point here we are, you can see us consolidating around this. This is, the short term. This is what I just showed you, the same slope, but it's obviously more granular. It's on an hourly chart. So you can see, kind of the sliding parallel we've come into here, support, additional possible support down here on this median line. Again, support around 201.40, potential resistance if this is a larger topping process would be around 204.80 to 204.90. Okay, so those are the levels, Chintan, that I would work on. Still a broader move higher at this point. 201.30.40 support. 204.80.90 resistance. Okay, at this point. Alrighty. I must say, though, I do like the pound yen short. If I'm going to trade a pound short, it's more than likely going to be pound yen at this point. There's some clean pound dollar levels to play with in the short term here as well. We were looking again for a slightly bigger rebound to take place for pound dollar, which would get us short pound yen as well, as we had this 5-wave drop, and we did have a 3-wave decline. It was fairly brief. Did end fairly close to the former 4th wave, but at this point, with the British pound against the U.S. dollar, looking at 2 legs down, comes in around 55.25, and that's actually pretty close to a confluence of slope over the next few days. Okay, so if you're going to follow the pound or trade the pound over the next few days, then be aware of this median line here, and this is simply the slope that extends off of the top here. Okay, so you'd be looking at resistance, on this median line, which, as you can see, it has been support. It was actually support, I guess, last night during Asian trading, and then this was 5 a.m. So I'd be looking on the median line, former lows, horizontal and slope coming in as support here. Could be resistance now near 56.60 or so, 56.50.60. Resistance 55.25.40 as support. And you can see it when we look on the bigger picture charts here. Chintan, you are quite welcome, my friend. Right? So here's this was the break. Okay, We were holding up here, kind of consolidating. It did break, so you're looking towards this lower parallel, which again is right around 55 tomorrow. Okay. Now, tomorrow, as we know, tomorrow we've got NFPs, right? So we've got the potential for a much broader spike, if you will, or a larger spike. So if we have 155 as resistance, or sorry, as support in pound, 155, maybe 155.25, respect the potential for that outsized move, right? And this is the weekly chart that is on the long-term page. And what I want to highlight is the median line that comes across that nailed the highs, okay? It nailed these lows back here in May and June. And that comes in at about 140 this week, right? 154.60, which happens to be the 61.8 of the rally from the June low. So that is a level that I think you're going to want to keep on your drawing board, front and center for NFPs tomorrow. Okay, is 154.60. Chintan asking, can you tell us about your work routine, how many hours you were working, etc.? Yeah, so a lot of my work is done on the weekend, actually. I do a great deal of work on the weekend because that's when it's quiet and I can think, and I have, I can map out all the levels and everything. As far as active trading, yeah, I'll trade actively here and there and take short-term positions that could last a couple hours or less. Sometimes during the Europe New York crossover. So that would be 6-7 a.m. in New York to noon here in New York. Like this morning, for example. I always have these charts front and center so I can see if something's happening and where it is. But this morning, for example, Kiwi, I saw it tanking, and it was tanking right into support. Okay, so I went and bought Kiwi. Let's see. Open chart, 5-minute chart. I don't know why, but I'm not seeing the chart pull up for TradeStation. If it did, I'd show you the entry on it, but whatever. All right. You're asking if there's any specific mention that starting the month, how much I'll work that month. No, I mean, it's a process. You got to be consistent with your process. So I'm always, I do a great deal of work on the weekend, and then a great deal of work during the week. I mean, when you're at this job, you're kind of always working. There's really not any downtime to it. Let's see here. Euro yen is an interesting cross to look at right now. Obviously, with kind of a broader topping bias with dollar yen, but recognizing that I could be completely wrong is one reason why I had the idea for potentially going long euro yen if it got to support. At the end of the day, that's kind of all you do is get your levels mapped out. So this was the gap open in euro yen. Obviously, we opened right here, okay, at 35, basically on the nose, 34.98. And we slammed right into a confluence. And this is huge support. This is just massive. Okay, you've got the slope from two very broad, you know, structures. I mean, this goes back to January, right? The early January low, the January low, February high, and then of course the low that we made back in April. And we've traded up to that. We've responded very near the highs, pulled back into the median line, found support there amazingly. You know, so I mean, unless you had orders just sitting there, it's, you know, you're not really going to sit there and, you know, probably trade that on Sunday night. But you can look to trade this though, you know, intra-week, which, you know, pull is a combination of things. You've got the median lines from several different structures. You got this longer term one I just talked about. You've got the shorter term one, which is very well defined. Okay, crosses the high up here, and then pretty close to the low. And we're looking to basically trade into that. So this could be an opportunity on NFP as well. Again, pretty much the same idea as what we just had, but that 134.98. Okay, as support. If you came down here, you'd look for support here. Yeah, the stop's got to be pretty wide because of event risk and NFPs, and you don't want to, you know, put it too tight a stop, and then the thing comes down here and rips higher. But if we were to find support here, you'd be looking at the upper parallel up here. If not, even, you know, the underside of this median line. Okay, and Euro yen could be very interesting to trade as a very broad range for several weeks. Okay, so support here, resistance up here. Okay, and as long as that holds, this low, this panic reversal Monday low, as long as that holds, I think the opportunity is there to buy weakness into these lines. Okay, the better entry you get close to the line, the better entry, right? Trading on the edges, if you will. What else did we want to look at? Go over some major markets here in a second. Oh, I know what I was. This is the weekly chart for Euro Yen, and you know what the huge short for this is going to be? I think is going to be up here, 43.80 to 44.60. Again, this is the structure that, you know, great slope, right? We had this going back, if you guys remember, we had this line back in December up here. It's the one reason why we ended up getting short back in December. We got a gap up here, okay? It could get filled at 144.60. But, you know, if we were to find support here, get up into this, that's the underside of basically this former lower parallel, which wasn't really touched as support, but the slope worked extremely well, you know, as far as former support becoming resistance up here. So it'd be something I'd pay attention to if we got there. And you'd also have, you know, the slope from, you know, remember this slope, which we were able to identify down here. Okay. Yeah. Oh, great call, Chintan, asking about Kiwi yen. You got it. Take a look at Kiwi yen. How's the euro dollar doing? Little bounce. Not really doing much of anything. Just take a look here. I think I've already got that chart up, actually. So here's Kiwi yen. It's like the biggest head and shoulders ever. The target's 74. Yeah, we have broken that head and shoulders, right? So, you know, there's obviously some people that would go short here, and I guess your stop would be above this high at 85.70. It's a little too much risk for me to take. I would, for me, the opportunity here comes on if you get a period of consolidation, look to sell into the resistance, okay, and then you can look to enter for this. But I mean, this is Chintan. As far as this is a Head and Shoulders. This is done. This is completed. You can get rid of the question marks because this has happened. Okay. This is a confirmed pattern, a completed pattern, if you will, as far as the Kiwi yen Head and Shoulders is concerned, and there is a target of 74 on this pattern. So, if there's the neckline, there's the neckline. All right, so there's the neckline. Sometimes you're lucky enough to get a retest of the neckline to get short. And so if that were to happen, and if it came in conjunction with the median line here, that could be up around 85, and then that would be an opportunity worth pursuing because that would allow you to put a stop at like 85.70, get short at 85, and see if you can catch the big one to the downside. Okay. Interestingly, look at this lower parallel. So this structure, this goes all the way back to 2009. Okay, 2009 low, high, and then we got a low back here in 2011. And you've got this lower parallel, and look, the upper parallel hit the resistance levels called the tops up here. Okay, but you've got the confluence between the Head and Shoulders target, okay, which is, as you can see, 74.08, okay, which is very close in line with the 2013 low from June of 2013. Basically crosses, this line in September. Okay, obviously, if we get there before it, it would be a little lower. But in general, that's what you're targeting with this. Is you're targeting the 74, 74.50 area, and generally speaking, you're targeting this support line. Okay. And this goes back, again, if you want to draw this yourself, use the low from 2009, the high from October 2009, the low from November 2011, and then do what's on TradeStation as a shift. And what it ends up being is just the slope of this trend line. Okay, that's it. Kelly asking, what is up with Aussie? Yeah, I mean, Aussie is in an extremely low volatility environment at the moment. If it's Aussie is like gold right now, basically, in that they're both, it's kind of like you get excited every time it makes a move. Like you think like this is it, this is the reversal, or this is it, this is the breakdown, and then really it's just a consolidation. Nothing happens. So, for a while, what I thought was going on, and this still could be what's going on, is that Kelly, I was looking for. This is the big leg up, right, that we had earlier this year. Okay. We failed very close to the year open price. Look, the trend for Aussie is still down, but that doesn't mean you can't have range trades between here, roughly, where we are now, and, roughly 80, which is where these resistance lines are up here. Okay, so I was looking for more of a continuation of maybe a triangle pattern, something like an A, B, C, D, E, and then a final collapse later in the year into 71 or so. Okay, and that could still happen. But with what's been happening the last few days, I think you should probably just be aware of the possibility of it continuing lower now, right? Just because we continue to fail at this parallel. we really are between a rock and a hard place here. We've got, today's high, kind of, a line in the sand, if you will, for any sort of bearish, near-term bearish interpretation. Because we go above there, and then, then finally I do think we get the broader consolidation before we head lower. But look at where we bottomed on Monday. And that has all the earmarks of more of a washout type of low, if you will. Okay? The low was 75.85 or something like that. That was a couple pips below daily reversal support, which is the close low for the, or the low for the day of the entire year's low in April, so like April 30th, I think. So that close low provided resistance. Okay, now what we'd be looking for on a sell would be the opposite scenario, to sell into highs up here, like 80.37 or 80.77. These are high day closes and high week closes, and it'd be in combination with longer term resistance levels up here. So, that combined with, very bullish seasonals and everything else kind of has me thinking that we could be in for a broader period of ranging in the Aussie. But look, we've got to put in something bullish. We haven't been able to hold anything bullish. Just haven't. Right? We were floating some pretty nice gains here, only to see them evaporate, and then took a trade that was a loss. Right? So every bullish thing we've seen has been just hasn't happened. So, we'll look to identify the opportunity as soon as it shows up. I think there's a great opportunity to play the Kiwi bounce here. I mean, if Kiwi doesn't bounce here, then there's nothing until like 65 something. Okay, I wouldn't even be looking at 66.07 at that point. I mean, this confluence, you've got this structure here, you've got a parallel off of here. This is the parallel that got us short up here, which I was in for like 3 days and should have been for 2 months, but whatever. And a bounce within this trend here still faces resistance for another sell up at one of these red lines. Okay. I want to look at the euro dollar. Kelly asking, so no buying Aussie, we just sell. I mean, I'm not saying necessarily just wait to sell. It could be that if we were to follow through on this and say tomorrow or something, we trade up through here, okay? So we've broken some resistance. At that point, what you want to see is then you want to see the market come down and make old resistance become support, and that's when you've got a trade. Okay? Maybe it's this slope that works. I'll show you the short-term chart I've got right here. This is the Aussie weekly, or sorry, Aussie weekly. This is the Aussie hourly, and these are the slope lines I'm following right here. So basically, Kelly, what you've got as far as short-term trading is concerned, you can see up here we nailed resistance. Saw that up there, put in some shorts. You've got support down here from these lower parallels, potentially at 76.20 or so, which is where we opened the week. That could come in overnight or tomorrow morning. So I'd be aware of 76.20 as resistance. I wouldn't necessarily be looking to be long, however, until we were able to crack this resistance line, okay? And at that point, you'd want to see the market break it, come down, find support, and then you could look to get long. All right, so I really want to look at the euro and just go through that quickly, because if we're still in broader corrective mode, then what you're going to see or a couple more swings within this range, okay, before we get the bigger move. All right. So again, this right here is what we are following at the moment, okay? Now this is a three-wave move off the lows, right? But one reason to suspect that everything since the high here in May is a triangle is that RSI on this daily chart has been trading between, since this, where this A label is, wave A, since that's happened, we've been trading between mostly 60 and 40, okay, on RSI on daily. So here's 40, okay. You can see the 60s, obviously every time up there. We're coming down into 40 again, support. So if this is indeed a triangle, and a triangle, I mean like from here, okay. And you're going to get another pop higher. It's going to confuse the crap out of everyone. You could see 1340 resistance. Watch the median line. And then we'll get another pullback lower within this. So, if I look at this from a short-term picture, right? Look at what we've got wave-wise, right? 3 waves down. It's clearly a 3-wave move down, okay? This is probably a 3-wave move up. With this is 1, 2, 3, 4, 5, and then this is triangle, and then a really small thrust higher, okay? This move here could complete a flat pattern, okay? ABC. So ABC, right? A, B, C, A, B, C, and then working on A, B, C here. So I don't really see an opportunity, or I should say a high confidence opportunity to trade the euro in the next couple days, but that could change really quickly, because if you end up getting, first of all, we've stopped at pretty good support, right, on the gap, okay. If we were to get a rally from this 1035.50 area, and again, it's up to you, of course, if you want to buy into this area, right? Me personally, I will be, not doing it right before NFPs, but if we were to get, and also because we do have bearish slope, okay, which we did respect, but if we were to get a rally from this area, again, roughly 1035, 110.50, and get a push higher up above 112.77, that could potentially complete wave D within the triangle. The next pullback would be the one to really look to get bulled up on the euro. Because if that were to happen, you put yourself in position to catch a giant so-called C wave squeeze, again, up to the 118 plus area. Okay. But we do need to see a few things happen before we need to see a few things happen before we look to do that, or look to put that play on. Okay. So, this is really in the back of my mind right now as far as, trading the euro is concerned. It's a time to observe it. I think until we see what I just, said happens, if we do get that pop and break this slope, then we could have a heck of an opportunity to buy into a confluence, say near 1035, near 1050 at some point in mid-July. For the much anticipated, long awaited dollar washout. Okay, so that's what I'm tracking with the euro. Could be a next, really solid opportunity. Okay, all right. So again, thank you everyone. Adrias, I've got your question here. Trading by the week. I guess you just mean longer term trading per se. So yeah, you just pay attention to daily and weekly charts, right? If you don't want to get all messed up with intraday stuff, then kind of do a lot of your work on the weekend and map out the levels and have those levels marked down. You put orders there, etc., etc. Right? But as far as is there any specific book I know of that just talks about that only? No, I do not have anything that I know of. All right. So again, thanks a lot, everyone, for attending, and good luck. Remember, NFP's early tomorrow. Early this week, it's tomorrow instead of Friday, and Mike will be covering it tomorrow morning. Okay, in a live session. So good luck tomorrow morning, and have a great weekend. All right, bye.